I've talked to a lot of people who are around my age, and there's this one thing that they commonly fall into. It's a debt trap. And it's mainly not really because they are poor or because they have an extremely low income. It seems to come from the fact where, they feel FOMO, they feel like almost they have to buy things. And I know it's extremely easy for us to fall into this just by telling ourselves that, we have to treat ourselves, right? We work so hard in our jobs, working 9 to 6, maybe even 9 to 7, 9 to 8, and we need to spend some of this money, right? To sort of reward ourselves for all that hard work that we put in. And I agree with that. It's true, we should reward ourselves, but there has to be a limit. A lot of the things that people buy is actually FOMO, in my opinion, and it's not helped that these days social media is so widespread. I would say you can see the things that your friends and families are buying. You can see the holiday destinations that they're going to, and suddenly you feel like you need that as well. Honestly, I have fallen for this myself as well in the past, not just once, a few times, but thankfully it didn't get to the point where I got into trouble. So let me talk about the 3 sneaky debt traps that you can fall into easily, as well as 3 ways that you can get out of it. Let's get to it. The first and probably the most dangerous one going on right now is buy now, pay later, or BNPL. It is so easily accessible to almost any Malaysian, and there are so many companies out there offering this as a product. It feels good, right? You can break down your payments into installments over a few months, and you can even, most of the times, get 0% interest. So it sounds like an extremely good deal. And it actually is. If you're financially responsible, then using BNPL is actually good. You can benefit from it, and I use it myself. The thing is, it's not just pricey things, right? Back in the days, you can walk into, I guess, like Senheng, you can walk into the Apple store, big purchases, you can split it into installments over 6, 12, maybe even 24 months. And yeah, maybe those make sense because, it's difficult for us to come up with 5,000 ringgit for a new TV, right? But these days, you can do it for anything at almost any price. There was once that I was at the driving range, for my golf, and I had to pay for the balls that I wanted to buy. And I didn't check. I made the payment so quickly, I didn't realize that I accidentally selected the 12-month installment option. So imagine, I was paying like 25 ringgit and it became a 12-month installment by mistake. I didn't even see that, that was what was selected by default. So yeah, now I'm stuck paying off, this 25 ringgit, and I think it happened a few times until July of 2026. That's pretty crazy. So they already charged me interest on it. There's no way that I can, clear it now and not pay interest. But thankfully, it's just a small amount. It's not anything huge. And the problem with BNPL is that it becomes death by 1,000 cuts, right? You break all of your purchases, the things that you buy on Shopee, your meals, everything, you break it into smaller payments over the next few months. And eventually, your monthly commitments becomes extremely high. Imagine buying 10 things this month and it's all, let's say 100 ringgit each. If you paid for it immediately, that would be 1,000 ringgit. But if you broke it down into 3-month installments, now it's just 330 ringgit a month. So it feels a lot more affordable, right? The thing is, next month you do that again, and the next month you do that again, and eventually you have a BNPL bill of 1,000 ringgit a month, and that's really bad. The dangerous part is that the money is not leaving a bank account immediately. It is leaving a bank account, over 3 months, over 6 months, maybe even 12 months. So you don't realize how much money you're spending until you hit the point where your monthly payments are too high. This actually happened to me before. I wanted to take advantage of the 0% installment, so I thought, a few big purchases, I'll just split it over 3 months. And it was completely fine, right? Because I wanted to, utilize my credit cards. I wanted to spread out my, cashback rewards. But it got to a point where I got pretty shocked by the amount of money that I was going to have to pay over the next few months. So I decided to just end all of it by paying everything upfront. Anyway, the next debt trap that I hear a lot of people fall into is the car upgrade. I say car, but it can actually be many other things. Some people do it with houses. So imagine you're in a situation where you get a 500 ringgit raise from your job and you decide immediately that you're going to find another commitment to spend this 500 ringgit every single month. And most people, they decide it's going to be a car. So now you get a raise, but instead of saving that money, investing money, or even, being able to treat your friends and family to things, now you're completely locked in for the next 5, 7, or 9 years on a new car. And I've heard some people literally tell me that, their car loan is ending, so it's time for them to buy a new car. It's almost like they're allergic to not having any car payments. They feel like they always need a car loan to go on. And if one ends, then maybe the car's a bit too old and they need another one. To me, this doesn't make sense at all. I'm not gonna lie to you guys, I have gotten into cars and I am, looking at these cars, but to me, it's mainly window shopping. I just can't stomach, the really high monthly payments that you have to make on a car, an asset that depreciates by a lot. And it's not just your monthly installments, right? Things like your road tax, your insurance, your maintenance, even your petrol in some cases will also go up every single month. So it's a lot of things that you need to consider. Again, I kind of fell into this as well. Back then when I was still working a corporate job, when I started this YouTube channel and I started making a side income, I decided to buy a Proton X50 in the premium spec. It's not that I couldn't afford it, it's just that, just as quickly as I started making more money, I decided it's time for a new car. And yeah, these days I can afford it with my income right now. It's very comfortable, but looking back on it, it wasn't the best decision. So next time you guys get a raise, take some time to at least enjoy the extra cash flow. You can buy things, you can reward yourself, but make it a meal, right? Make it a holiday. Or if you really want to buy something, at least do it something like an iPhone, where it's just a one-off payment instead of something that you'll be locked into for the next 5, 7, 9 years, or if you buy a house, 35 years, because these things, it's difficult to get out of. And the final debt trap that a lot of people fall into is, of course, credit cards. We can't talk about that without talking about credit cards. So before, buy now, pay later was a thing, credit card was where everyone was drowning in debt. It's so easy to use it to sort of supplement or sustain a lifestyle that you have. And I say sustain, but it's not actually sustainable because eventually the payments will catch up to you. I've literally had people tell me these two things when it comes to credit card. One is the person who thinks that, hey, I'm making my minimum payments every single month. My bank is not chasing me, so it's fine, right? Well, it's not fine because if you only make minimum payments, it means that the rest of your outstanding balance is going to get charged interest, and the interest is extremely high, 18%, or I guess it depends by bank and credit card, but I have seen it at 18-20%. That is crazy, and you don't want to get stuck in that position. And you feel like you're making minimum payments and it's affordable, but after a while, the amount that you owe, your outstanding balance will start to grow and grow and grow, and eventually you can't even afford your minimum payments anymore. Another one is this person literally told me that they don't know how much they're spending on their credit card. They don't know what their credit card bill is. They just have a standing instruction with their bank to make the minimum payments every single month. And as long as your credit card is not getting declined, to them, everything is fine. This to me is pretty insane. It feels more like denial, like you don't want to know how much you're spending or how much money you owe. And the thing is, eventually, again, this will catch up to you. If you've gotten to the point where your credit card is getting declined, it means that you've maxed out your credit limit and you probably owe a lot of money. Again, it's so easy for us to get stuck into this because, these days when we make a payment, we just swipe or we use Apple Pay even. It doesn't even feel like we're spending any money because it's not leaving our bank account. We're not giving cash. It feels like it's free, right? But of course, it's not free. And I always say that credit cards are good and people should learn how to use them because it helps you build your credit score and it gives you cash back and rewards, and it can be quite a lot, but you have to know how to use it responsibly. So if you're stuck into any of these debt traps, what can you do? The first thing is you have to tackle this problem head on. Ignorance is not bliss. You have to know what is going on with your current financial situation. So be brutally honest with yourself and find all the numbers, all your credit card statements, outstanding balance, how much you owe every single month, your buy now, pay later commitments, and even any other commitments that you have. You gotta know exactly how much money you owe so that you can start, preparing your plan on tackling this debt and eventually clearing it all off. There's this saying that goes, identifying your problem is 50% of the solution. You can't just ignore it and then wait and just pray for the best, because the best will not come unless you take action to sort of clear it. Next, you gotta try to stop the bleeding, stop adding more debt, right? We have the problem, so we need to try and minimize our spending, minimize any new debt being taken on. So figure out all of your monthly expenses. You can start tracking it using an app, or you can try and figure it out from your previous credit card statements or whatever it is. And then you need to start looking for areas where you can at least temporarily cut down on. So for me, this is usually subscriptions. So things like Netflix, Spotify, every single month we're being charged. things like eating expensive meals or maybe even buying coffee or matcha. These things are usually what I can cut down on, but you have to know your expenses to figure out which areas you can cut down on. For any spend that is not essential to your living, right? Just leave it in your cart for at least a week before you decide to buy. So we want to cut down on all these impulse purchases. Most of the times you'll figure out that after 1 week, you don't really want it anymore. Finally, it is time for you to tackle your debt and end this misery. So there are two approaches for this. One, in my opinion, is a bit better for you mentally, while the other one is a bit better financially. So the first is called the debt snowball method, and this is extremely popular in the personal finance space. So the way it works is, let's say you have 5 different loans, right? For 4 loans, you will pay off the minimum that you can, and then for that one loan, you will try to clear it as fast as possible. And how you determine which loan to pay off first is you will choose the smallest one first. So the reason that you do this is because the smallest one is obviously the easiest and the quickest you can clear off. And every time you clear one debt, it will give you sort of a feeling of winning, right? It will give you motivation to continue to tackle the bigger debts later on. But the most pragmatic one and the approach that I would use if I was in this situation is to clear off the debt with a high interest rate first. So let's say you have a credit card debt and you also have PTPTN that you want to clear off. Even if the PTPTN debt is less than your credit card debt, in my opinion at least, it doesn't make sense to try and clear the PTPTN first, just because that is around 1% interest per annum, whereas credit cards, like I said, can be 18% per annum. So if you focus so much on clearing your PTPTN debt, your credit card debt will just continue accruing and it can become a very large number. So this approach to me makes more sense. Basically, tackle your debt based on which one has the highest interest rates first, and then go down and down and down until eventually you reach a very low interest rate one. And if you really don't have a choice, then what you can do is you can reach out to your bank that you owe money to and try to figure out a more manageable payment plan for you. Or at a worst case scenario, you can go to AKPK and it will help you out with all these debt management issues. And once you're out of this debt, congrats, try to never get back in. The thing is, like I said, we need to realize that a lot of things that we do and the things that we buy is for flex, and it's because, we feel a lot of FOMO. But the real flex, in my opinion, is financial peace of mind. Even though people can't see it, but having this will just make you feel a lot more secure, and it's a lot more worth it than, going on some crazy holiday that you can't afford. Let me know in the comments below, what is the current debt that you're trying to, sort of clear right now? And if you've been in this situation in the past, how did you get out of it? I hope you guys enjoyed this video. Give me a huge thumbs up if you enjoyed it and subscribe to my channel if you haven't already. See you guys in the next one. Peace out.